Hey everyone, Ben Nelson, the everyday real estate investor here. Hope you are having a great day. And thanks again for tuning in to another episode of the podcast. Hope you've enjoyed the amazing guests that we've had on over the last few weeks. And you've been able to glean some really good knowledge and some tips, some success tools from them and from their journey and experience. So, looking forward to having some more amazing guests on here in the coming weeks. So make sure you tune into that. But today you get just me again. So I kind of flip back and forth between interviews and bringing on some guests, and then kind of putting some of my own thoughts out there. And last week we talked about property due diligence, and I really hope that was helpful. If you have not listened to that episode, definitely go back and listen to it because there's a lot to what you should look at when you are buying an investment property, and making sure that you are looking at all those things that could be both positive and negative, right? Your potential hurdles, your potential pitfalls, and your potential opportunities that maybe other people are missing. So, great information to be going over. Again, not a fully extensive list. There's a lot of stuff we went through, but there's always more that you could consider looking at, and maybe should be looking at, depending on um, the type of property and the location and all of those factors. So again, definitely go back and listen to that investment property due diligence if you have not yet. Take notes and make sure you're doing great due diligence when you're buying a property, so you're not missing something. Again, either opportunity that you maybe don't see, or potential pitfalls that could kill the deal. And you want to find that out before you purchase it, not after, right? So okay, but today we are going to talk about this this question of, okay, I've found a great opportunity. Um, this seems like a good deal. I've done my due diligence, right? And I'm gonna close on this property. I'm gonna buy it. But I'm still kind of figuring out my exit strategy. What am I gonna do with this? And we always talk about having more than one exit strategy. You want more than one thing to work, so you don't feel stuck in a deal and you don't have another option, right? But you always have a plan A, right? You're like, if everything works out, this is what I want to happen, right? And so the plan B is just in case that doesn't work for some reason. And so you're working through that in your numbers in your head. What do you want to do with this property? Is this going to be short term? Am I going to put some sweat equity into it? Am I going to do a value add? Am I going to turn around and then put it back on the market and sell it for that new equity that I've forced? Or am I going to hold this? Is this going to be a long term hold? And sometimes it's pretty obvious. Sometimes it's pretty clear that it just makes more sense as one versus the other. And sometimes it's not so obvious. And sometimes, you have to kind of really dig into what makes more sense. And as we talk about this, I totally understand there's a whole range of investors out there, obviously, right? There's people that their main model is they flip. Um, and there's people that their main model is that they hold. And then there's obviously a hybrid, people that do a little bit of both. And maybe they lean more one way or the other, but they're doing both holding and quick turns on stuff. And even if you are like almost like you call yourself fully a flipper. I don't hold property, or which I we'll get into that in a minute, but I don't think that that's a great business model, and we'll get into maybe some of that here in a minute. Um, but maybe you're just a hold guy. Like, I just don't want to. I don't resell. I don't sell anything. Sell is a four-letter word, right? I keep everything. I never sell. I don't want to do a short-term deal. I'm going to challenge you on that. Because it's totally fine to be one way or the other. It may even be the best way to go about it, right? It's like, I'm looking for hold properties that work as a hold. But if you're so stuck in that model, you may miss a great opportunity where there's the potential to do something maybe a little bit different than what you normally do. Um, and you would just, skip that over that if you are, so locked into your, like, I only hold, I only flip, right? So you want to have an open mind. You also want to be careful, right, to not get too outside of your wheelhouse. Or if you do get outside your wheelhouse, make sure you bring along others that can help you um, in that process as you kind of delve into something maybe a little bit different. But again, just want to challenge you to not get so stuck. I only hold, I only flip. Um, let's keep our options open. Let's not miss opportunity by being so stuck in our one model, right? Okay, so we're going to jump into some things to maybe consider as you're looking at this property. You're like, what do I do? Do I sell this? Do I make this a quick deal, um, or do I hold this long term for cash flow? And okay, so let's get into it. So things to consider when you're looking at a flip versus holding something. Obviously, cash flow is one of those things, right? Um, but it's cash flow now, and it's also cash flow long term, right? So um, you want to look at things like, what's happening in the rental market. Where is the rental market anticipated? Maybe you're buying something that is break even right now, but it has really good future potential for cash flow, and so you're breaking even for a year or two, but you know that in the future that cash flow is going to be much better than it is right now, and it makes sense to hold on to it long term. um, what another thing, so Antici anticipated appreciation, right? And so I guess, so back on the cash flow thing, you might, if you had definitely want to look in the future, because you may look at it and say, this doesn't cash flow. This is obviously, I'm going to sell it, right? I'm going to turn around and sell it. But if you're not looking ahead, if you're not looking towards the future, and yes, the future is not guaranteed, but you can extrapolate out, and there's rent trends and all that stuff. And you never know if those are going to hit, but you can get a pretty decent idea of where things are headed by looking at. We've looked at those things before in prior podcasts, how to analyze a market, things like that, and see where things are going. But yeah, I mean, you want to factor in not just now, but in the future, right? Same thing with appreciation. Appreciation, you may force some equity by doing a little bit of value add, but what does appreciation look like in that market? Does it look is it going to be above average? Is it going to be above what some of the other markets are doing? Does it make sense to hold on to it for a couple of years? And we're not talking about tax at the moment. We're going to, but if you hold on to it for a couple of years and turn it into a hold property and then do something with it later, it changes your tax situation, and you might get the benefit of, you've got some more equity that you've gained over the last couple of years because the market has grown. So that's definitely something to look at. Maybe it's not, just because you hold something doesn't need to mean it needs to be 10, 15, 20 years. It could be for a cycle. It could be for a couple of years strategically, right? So again, we can be kind of in the middle, right? Like I'm not going to sell this right away, but I'm going to hold it a little bit. I'm going to get a little bit of cash flow. I think the market's going to do really well. I'm going to wait for that additional appreciation over the next couple of years. I'm going to get a little bit better tax benefits, or I'm not going to have to pay so much because I'm in long-term versus short-term capital gains. And so there's definitely things to consider there. Okay, here's one for sure to be looking at is the property itself. Um, what is the property like? What is the age of the property? What is the functionality of the property? What are you anticipating for future costs and maintenance? Um, if this is a fairly new or recently updated, or you invested the money to get the property in the condition that it needs to be um, moving forward without having a bunch of maintenance needs and stuff like that in the future, that's a different situation than something that's maybe an older property that is going to need some work in the future, and it just doesn't make sense to hold that or put that money into that building. And we've got a property like this right now that we are working towards. We have to partition it first, but there is a new building that's a few years old, and then there's an old building that's built in 1901, and it's not a bad property. We did a bunch of work to it, but it's 120 years old, and it's going to need more work than the one that's 2 or 3 years old, down the road, right? So it's probably going to need siding. It's probably going to need a little bit of maybe foundation work. It's going to need some, a good amount of investment, where it's like, we're not the amount that we're going to invest to do those things. We're not going to get all of that back. And so it's like, we have to look at, do we want to do that? And then we'll just amortize that out over owning it for 20 or 30 years. And then, okay, then it's not a big deal, because we want to hold it for 30 years. And so if we invest, $100,000 in all of those things, less of a big deal if we're holding it for 30 years. But if that's not the plan, or if there's something better we can do with it, right? If we can sell that instead of, um, and if it's not hurting the value by the amount that we're going to have to invest in it, we can take that and we can exchange that into a different property that maybe has less maintenance that it's going to need. We can actually leverage more and buy something a little bigger. So that's a big consideration to look at, is what is your building, what is the cost going to be. Um, and I didn't put this in my notes, but I kind of alluded to it there, like the whole compared to what thing, right? So um, you know, you can keep anything. You can probably make you can't make anything make sense, I guess, but you can justify keeping a lot of things. But you also have to do the whole compared to what. Like, okay, this property makes sense to hold. And we can make it make sense, and we have good financing on it, and and it cash flows all right, and we think the area is going to grow, and we're going to get 3 or 4 or 5% annual appreciation, and this is a decent investment. But can you do better? Can you exchange it into something else that is going to perform better than that property? So definitely don't want to, again, I didn't uh, write that one down in my notes here, but it's for sure something to hit on really quick. Making sure you're doing that compared to what, and not just looking at the one property that you're evaluating, whether you should hold it or sell it, but what else could you do instead? What could you buy instead of that? That's a big one. Okay. Income and tax. This is a big thing to consider as well. Again, not a tax advisor, not a CPA here. You definitely need to talk to your own advisors on this. But generally speaking, your flips, your short-term holds are earned income, and you're going to be taxed based. It's going to be taxed at the highest amount that based on your income bracket, right? It's going to be taxed based on earned income versus holding. You're going to get that longer term capital gains, or you're going to be able to 1031 and exchange that and defer those gains into the future, buying something else and exchanging up. So this is a big one to consider, and a lot of people don't. And this is where I say, if your model is only to flip and I don't want to hold anything, you are missing a lot of opportunity here, especially if you can, if you have, again, not a CPA, but if you have a passive income that you can use depreciation, or if you are able to qualify as a real estate professional, you can use that depreciation on your hold properties to offset your earned income and not be paying as much on those flips, right? So if you say, okay, I only flip, you may consider buying, 1 or 2 rental properties a year, keep a couple of them, and use that depreciation on those long-term holds and offset your earned income, and you will be amazed at the difference in your taxable income and how much you get to keep versus how much you are having to write a check to the government for. So lots of reasons to consider holding, even if you're only mainly a flipper, and start adding to your portfolio, and tax is one of those. So you need to weigh that factor for sure. Um, the other thing is that you may be able to, if it's like, well, I want to get to that equity. Now it's harder to do now, especially where rates are at, but you know you can get creative financing, private lenders, things like that as well. Can you, like, I want to use that equity, right? I want to use that equity to, I need to pay my bills, right? Or I want to use it for my next project or whatever. Um, is there a way where you can leverage that property, still control the cash flow, and control the debt, where you're not feeding that every month, right? You don't want to get into a negative cash flow situation where you're having to feed it. You want the property to be able to take care of itself with its cash flow. But can you leverage that property, leverage that equity, and access it so you have the capital, but without having to sell the property? So definitely something to um, to look at there. If you have enough cash flow and you have enough equity, you might be able to get some additional um, leverage on that property to be able to use some. You're probably not going to get all of it, okay? But if you sell it, you don't get all of it either because you have sales costs, right? You have sales costs and things like that. So if you're able to, it's something to look at, and again, just weighing our options, right? Okay, so location. This is a big one as well. Where's the area trending? Is this an area where it's like it's fine now, but maybe it's not headed in the right direction, or maybe it's the opposite, right? Where's the area trending? What's the area like? Um, what's it going to be like to manage a property there? Is it going to be more difficult or is it going to be easier? Right. So, location is huge here in Portland. It's just there's plenty of people that own and hold property in Portland and in Multnomah County. um, but there's another layer of legislation there. So it's just something you have to consider when you're looking at buy versus hold. You may be okay buying something and doing, maybe repositioning it, maybe even getting all the units leased out and then selling it as a turnkey property. There's people willing to buy that still in areas that are more challenging. um, they may want a little higher return for it, but there's still buyers there. But maybe it's something you don't want to deal with. Maybe it's something that you are just like, this is not something that I want to deal with. I would rather hold in these other areas, but if it's in this area, I'll still do a deal there, but I don't want to hold it long term. So that's a big thing to consider. What's the area like? How difficult is holding versus selling? Where's the area trending? And on that, again, with the appreciation and the long term cash flow and the growth there, do you think it's going to trend up or down, right? Is the area getting better or worse? Is it worth holding because the area is going to continue to get better and better? Maybe it's in a transitioning neighborhood, and in a couple of years, it's going to be worth a lot more as the neighborhood gets fixed up. That's something to consider. So, where's the location headed? What's it like to own versus sell there? Um, that's all things you need to consider. How and again, what's the trend in legislation, everything like that? Is it going to become more and more difficult, or is it becoming less and less stringent? Which i I I'm sure there are instances, but generally speaking, things don't get less stringent, they get more stringent. So but where's that trending? And okay, so next one is their future opportunity. So this is another kind of growth thing, but um, is growth headed the direction of this property? Is it kind of in the outskirts, or is the city growing that way where there's going to be maybe different opportunity later um, versus right now? Are you going to be able to take the single family home and it's zoned single family, and the zoning is going to eventually change down that direction where you can build a multifamily on it? Um, is the population moving that direction where it's just going to become more expensive as it becomes more densely populated? um, can you hold it, maybe even if you want to sell it, maybe you can hold it shorter term while those things happen, and then sell it later when there's a little bit more value because of those changes that have happened. Um, Here another one. Can you do, like, again, kind of a hybrid deal, right? Can you hold something short term while you do an additional value add, right? I was talking to some folks yesterday about a deal that they were doing that I didn't look into the zoning, but I'm pretty darn sure that they could have partitioned this property and got an extra lot out of it, but they didn't do it when they started their remodel, and so now it would probably throw off their time frames and all of that stuff. But if they would have done it at the very beginning when they started doing the remodel, they might have been able to, um, get another lot or two out of it at the same time as they're doing their remodel to the house. So again, that kind of, and you can extrapolate that out, and so now yes, you're still flipping it, but maybe you buy something where it's like, okay, this is going to take a year and a half to partition this. Let's rent out the current residents while we go through that, get some income coming in to offset our carrying costs. And then we'll do this value add. We'll do this kind of longer term process. and then we'll turn around and sell it. So again, kind of in the middle there. You're selling it, but you're holding it in the meantime. And so again, these are just some ideas, some things to consider. There's a lot of different factors. This is far from everything to look at. Your team, your business model, what are your resources? Do you need the cash now? Sometimes that's honestly a driving factor, right? Do you need the cash now? Do you need to sell it to get the cash versus holding it? All sorts of kind of macro and micro level factors, all sorts of personal and philosophical and market factors. So just lots to consider. I guess my main point that I want to get across here is don't take it lightly. Um, Again, there's going to be some that are obvious that is just like this is for sure, and it could be for any of these reasons. It could be in areas like I just don't want to hold here, right? Um, but it may not be so obvious. And if you don't ask the question, you may miss something and you may regret selling something that you maybe should have held on to for a little longer, right? So just ask the questions, right? Ask the questions when you're looking at a deal. Does this make sense? When you're putting it together, your plan A and your B's. Maybe your B ends up being your A, right? Maybe long term, if A doesn't work out, if I don't sell it, then I'll just hold it for a little while, and you may look into it as you're looking at that and say, you know what, this makes more sense to hold for a little bit first, and here's the reasons why. So again, I just want you to ask the questions. I want you to look at these factors and just make wise decisions, calculated decisions, and not whimsical decisions, not decisions that are just made automatically almost, right? Because you're just not considering the factors. So and I'm going to throw this out there. This is definitely pushing one versus the other, but ultimately long-term holding creates wealth versus just your short-term creates your earned income. So there's absolutely a place for flips and short-term projects and development and all of those things. But even if that's your main model, don't put holding to the side. Don't overlook holding, because that's how you're going to create long-term wealth. That's how you get some of those additional tax benefits. That's how you get the benefit of someone else paying down your loan and really getting the power of that leverage, because you're getting a return on someone else's money, and someone else is paying that down. You're getting appreciation, amortization, tax benefits, and cash flow, and there's just so many benefits to it. I just really, if you're not holding anything and if that's not been on your radar, relook at it, because there's a lot of reasons to do it, and you don't have to make it your main thing, but take some of that earned income from your flips, use that to not just invest in your next property, not just pay your bills, but use some of that earned income to put it into long-term investment for your future and your future financial wealth and financial freedom. So hopefully this has been helpful to you guys. Again, thanks for listening in. Make sure you stay tuned for the next few weeks. We're going to have some great guests again, talking about their journeys and the niche that they're involved in and the things that they're doing. So you can learn from their journey and get inspired and ready to take more action on your end. And hopefully that is helping you guys continue in your journey wherever you're at, whether you're just starting out or trying to retool or pivot in this changing market, that you can get some inspiration from some other people that are out there doing the thing. So thanks again for listening in. And until next time, go out and find some amazing real estate deals, do some great due diligence, ask the question, should I hold this or should I flip this, and make some really good educated investment decisions. We'll catch you next time.